Good day, everybody. It is September 30th, and I thought I'd make an investment video just to keep people up to date on where I'm going, how I'm doing, and whatnot. So, to start out, it's the end of the month, and as you can see, my account is up 6% year to date, which is not too bad. It's not great either. 6% return. On my account, I've only that only equates into about $267. You can see up there. Nothing really spectacular going on. The chart you're seeing on the screen right now is Afria, one of the medical marijuana stocks. It's been doing, or it's done very well in the month of September. Pretty much dollar gain straight up. It ended really well on Friday. Its earnings are expected to be posted sometime, possibly this upcoming week or the week after. So I expect this to keep going. As you can see, though, the green line is my break-even line. I'm a long ways away. I'm still down on my Afria position. Katanga, the copper and cobalt miner, just steadies its forward march. It's just going great. The last thing I read said that still expecting the mine to resume production this quarter. So this is still going to be one of my best investments. I think it's been doing really well for me now. As you can see, I got in at 45 cents and 62 cents, and it is over a dollar and holding over a dollar. It tested the over the dollar range mid-month, dropped a little, and it's surging upwards again, which is normal. Aurora Cannabis, my other. Let's move it to the 30-minute chart so you can see it. This is my other medical marijuana stock. Over September, it rallied great, and then it posted its financials, its quarterly financials. And as I read it, it was a fairly mixed bag. It still posted a loss, like per share. So it's okay. It's still strong. It's spending a lot of money on capital expenditures, which is why it's down. They're pumping all their money into their big Aurora Sky facility, which will drastically increase their production. So another great stock. I am well up on this one. As you can see, 252 is my break even, and we're touching around the 280s right now. Nothing else really to note. Royal Bank did good yesterday. Fortis did good. Royal Bank's one of my financial stocks. Fortis is one of my utility stocks. They're the safe guys, right? They're the safe money. Shaw was flat. I'm up on this one again during this month, but these are safe stock. My Synovus stock, this is what I get bought. This is an oil company, and this is what I get paid, or part of my work package gives me Synovus stock. And they hit bottom right before September, and they're coming on strong. They're doing good. September was a really good month. I recouped a lot of losses because I have I have like 800 or 900 shares in this stock, so I took a huge hit. I rode it all the way down to the bottom, from the $20 mark down to the $9 mark, and this $4 gain really helped to recoup some of those losses. But I'm still down, I think, about $3,000 in a dollar amount for the year due to this decline. So, and I'll actually show you that right now. You can see this is my investment plan through work, and the majority of this is containing Synovus shares, and you can see I'm $3,400 down for the year, or 18% for the year on this account, due to the Synovus stock falling. Luckily, my pension plan that I have through work and through just my own personal investment account, I'm still up a whopping $25 return on investment for the year. So, or 0%. 0% for the year. But hopefully those numbers will improve. The Synovus stock will keep increasing throughout till the end of the year, and I'll make some money back. My biggest position, I went all in on this American Manganese. I don't know if I talked about it in the last video, but I had bought in 1,800 shares back in here just because of some of my own research. And then they posted that one really good article right here, and the shares popped, and I rushed to get in thinking that it would keep popping, and it kind of I bought in at 23.5 cents, and then it just kind of dropped off from that high, and it's just leveled out around the, I'd say, the 20.5 cent range, which isn't too bad, but it sucks that I bought 4,000 shares and then lost. It went down 2 cents, so my break-even price now, given this position and this position, is just under 22 cents. So I think this one's still going to be a really, really good one. This is the manganese producer that's getting into the tech space. They've got some patents out on some battery or electronic vehicle battery recycling technologies. I think this is going to be a really good play for the future. And even if it goes up $1, like 6,000 shares, that's $6,000. It didn't cost too much to jump into this one at this price. Cameco, it's just doing whatever. It nosedived yesterday, but no big deal. I don't have a lot of money tied up in Cameco. 10 shares at $14, so it's at $140 I got in there. And then by my possible future buys, I was looking at this First Cobalt. It's a Canadian cobalt company. They just haven't shown me anything. It's they don't have any operations producing. They're not profitable. Yeah, earnings per share negative 14 cents. They're not profitable, but I'm still looking at them because all they need to do is find a nice rich deposit of cobalt, and they could do quite well. Anyways, guys, that's the end of September. I have to make I have money to make a purchase starting on Monday in October, and I kind of like where I'm sitting right now with the two medical marijuana stocks and my two the mine and the cobalt and the battery stock. So I think what I'm going to do is I'm going to pump some money back into this REIT. This is a Dream Global Real Estate. They invest primarily in real estate in Europe. Most of their holdings are in Germany. They here's where they bought the Norwegian properties, and you can see they punched a bunch of money into these Norwegian properties, and the stock fell almost $1 because they took on all that debt. But they're really good acquisitions, and the stock price rallied up and hit a 52-week high, and now it's just kind of up and down, up and down. I'm sure their next quarterly results will be very positive. So I think in this stock pays a nice 7% yield, or 7 cents per share. So I'm thinking I might buy back into this one. As you can see, right now I'm holding 20 shares at $9.17, so I'm pretty much nothing. But even at that, I still get a dividend every month. So I'm thinking I might pump in $300 worth of shares into Dream. In my opinion, it's a very good pick. It's a very good REIT. They used to have issues with just buying and buying and buying. As you can see, like they were up and down, up and down, up and down, up and down, buying new property. But they're positioned now where they've got a really steady base with some good cash flow. Let's take a look here. Their PE right now, or earnings per share, they're profitable. They're about $1 per share. No estimate for EPS for next quarter or this year. And their PE has gone up, but it's still a respectable 17. In my opinion, anything under 20 is okay. Under 10 is great. And anything over 20, you're starting to get into a little bit of overvalued area. Let's show you here. Afria, they're profitable, but they only make 3 cents, or they made their last one was 4 cents per share. So their PE obviously is really high because it's a ratio, right? They got so many shares outstanding, and this is a price to earnings. So their price, which is $7 divided by 3 cents, big number. Synovus, as you can see, people are starting to jump into them. Just as an example, their PE is 4, which is insanely low for an oil company. Everyone thought when they, let's make this smaller, back here when they bought out all the ConocoPhillips assets and doubled their own production, everyone thought that was crazy. And yes, they took on a huge debt load, but that translated into, look at that, earnings per share, $3. They're making money hand over fist right now, and they're selling assets. I think they sold two assets in this time. They sold their Pelican assets, and then they sold their Suffield gas assets right around in here. So their PE is basement low. Give you an example to take against that. Royal Bank, which is typical safe, very safe, good dividend yield. This is where people put their money to hide it because it's pretty risk proof. A lot of the big banks, they'll have a PE of around that 13, low teens. TD, Toronto Dominion, I think the same thing. 13. So an oil company, Synovus, an oil company with a PE of 4. That's pretty damn good. And if these guys rally back to 20, I'll make some really good money off of that. So anyways, guys, this is just my quick little recap of where I am year to date and what I'm going to buy next month, how I'm doing. I'm doing really good. I'm pleased. It's 6% gain for the year is not great. But, I made some mistakes off the beginning that I'm paying for, like buying Afria high and getting into Amy at the high. I did that again, but I don't think I'm going to see such a decline there. I don't consider that a mistake yet. Afria was definitely a mistake. I bought in right there, right at almost at the peak, just because I was buying in off the hype. Back in April, I'd only been investing for 4 months, and I've gained a lot of knowledge since then. I won't make that mistake. Hopefully I won't make that mistake many more times. I can get caught up in the hype though, guys. So anyways, guys, if you got any questions, comment below. I'll definitely get back to you. And hopefully you get into investing and we'll all make money together. Peace.